Hey everyone, welcome back to Corporate Decoder. Today Z.E.O just filed an amendment to a stock purchase agreement, and I am seeing one change that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is giving themselves more power to set a minimum price for selling their stock, which could be a big deal for investors. Alright, let's dive into this filing from Z.E.O Energy Corp. This is a Form 8, which means it reports on events that shareholders should know about right away. The key event here is an amendment to a previous agreement they had about selling their stock. Z.E.O Energy Corp is the company in question. They are a Delaware corporation, and their stock trades on the NASDAQ under the ticker symbols ZEO and Z.E.O, which are their common stock and warrants respectively. This filing tells us that their class of common stock, which has a very small par value of $0.0001 per S-share, is listed on the NASDAQ stock market. They also have warrants, which are like options that allow holders to buy shares of their common stock at a specific price. In this case, $11.5 with adjustments possible. The main point of this filing falls under item 1.01, which covers the entry into a material definitive agreement. We're told that back in January 2026, Z.E.O Energy Corp had entered into a common stock purchase agreement with a company called White Lion Capital, LLC. Under this original agreement, Z.E.O had the option to sell up to $30.0 million worth of newly issued shares of its common stock to White Lion. This is a common way for companies to raise capital, especially if they need flexibility. Now, on the 20th of August 2026, they signed an amendment to this agreement. The really important part of this amendment is that it changes how they can set the price for selling these shares. Specifically, it allows Z.E.O Energy Corp to set a minimum purchase price per S-share called a floor price. When they issue an accelerated purchase notice before this amendment, they did not have this discretion to set a floor price. Think about it this way, if a company needs to sell stock quickly, they might have to accept a lower price. But with this amendment, Z.E.O now has the power to say, we will not sell our stock for less than X dollars per S-share, and they get to decide what that X is. This gives them much more control over the price they receive for selling their own stock. This filing also lists the exhibits, and the most important one is Exhibit 10.1, which is the actual amendment number. One to the common stock purchase agreement. This is where all the legal details are laid out. So what does this mean for investors? When a company can set a floor price for selling its stock, it can be a way to prevent significant dilution at very low prices. Imagine if the stock price is really low and the company needs cash. They might have to issue a lot of shares at that low price, which would significantly reduce the value of existing shares. By setting a floor, they are trying to protect the value of their stock. However, it is also worth noting that Z.E.O Energy Corp received a notice from NASDAQ regarding a bid price deficiency earlier this year. This means their stock price was below the $1 minimum requirement for listing on NASDAQ. When a company is facing such issues, raising capital becomes even more critical. This amendment could be a strategic move to ensure they can raise funds without further devaluing the stock in a desperate situation. Looking at the broader context, Z.E.O Energy Corp recently completed the acquisition of Heliogen Inc. in August 2025. This is a significant move that could reshape the company. Acquisitions often come with integration challenges and financial pressures. The company is also listed as an emerging growth company, which means they can take advantage of certain regulatory flexibilities. However, they have elected not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they are aiming to adhere to the latest accounting rules sooner rather than later. We also see that institutional investors like Highbridge Capital Management, K2 Principal Fund, and Polar Asset Management Partners hold substantial stakes. These are big players, and their involvement can influence the company's direction. Now, let's consider the implications of setting a floor price. On one hand, it shows a commitment to protecting shareholder value by preventing excessive dilution. On the other hand, if the market price of the stock falls significantly below this floor, it might make it harder for the company to raise the capital it needs. This could become a balancing act for Z.E.O Energy Corp. Historically, companies that struggle with bid, price deficiencies, and need to raise capital often face tough choices. If they can't find buyers at a reasonable price, they might continue to struggle. It is similar to situations where companies have had to enact reverse stock splits to meet exchange requirements, which often don't solve the underlying business issues. For example, Kodak's one for 20 reverse split in 2021 was followed by further stock price declines. While this amendment isn't a reverse split, it does highlight the pressure on Z.E.O to manage its stock price and capital raising. The risk I am watching is whether this ability to set a floor price will be enough to stabilize the stock and allow them to raise capital effectively. or if it will simply create a barrier to necessary funding. What I am actually looking for is how they plan to grow the business to a point where the market naturally supports a higher stock price. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, please like, subscribe, and join our Discord linked in the description.